It was probably 50-50 with real estate, but I didn't know that because I didn't even understand private equity at all back in the day. So, and then the second thing is getting a mentor. I mean, that's the fast track. I mean, why are you trying to blaze your own trail when somebody already did it and they already know where the pitfalls are and the landmines? So just get somebody else to show you where the landmines are so you don't get set back by half a decade or something like that, right?
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor!
Now, here's your host, Dr. Alex 𝐻𝐿𝐽.
Hello, everyone. Dr. Alex 𝐻𝐿𝐽 here with another episode of the Physicians and Properties Podcast. As always, I'm your host. And as always, I'm so glad that you're here listening to another episode of the Physicians and Properties Podcast. This episode was awesome. This was with Dr. Amir Baluch. He was an anesthesiologist, is an anesthesiologist, but he also has an incredible professional background in finance, entrepreneurship, and healthcare. It's really cool to see how he has generated decades of experience in medicine, but also experience in private equity and securities. He has done so much and obtained so much education in the financial space, getting his Series 22 and 63 certifications. And he's worked with brokers. He is a broker himself. And he's just really crushing it. And him and his brother have partnered together for Baluch Capital, which is a prominent alternative investment platform. They generate exceptional risk-adjusted returns and consistent cash flow for accredited investors. They manage over 80 investment projects, a cumulative value of over $700 million, which is incredible. We talk a lot about getting started in real estate and entrepreneurship. We talk about some struggles and pitfalls and things to look out for, but more specifically, how Dr. Baluch used some struggles to help him grow in medicine and help him grow throughout his real estate and business acquisition journey. He's also written an incredible book called Make It, Keep It, New Age Wealth Strategies for Physicians, and is getting ready to come out with or launch his next book, Prosperity Prescription. This episode was incredible. At the end, stay tuned. Dr. Baluch asked for you to provide some feedback for some topics that you want him to come back and speak about on the podcast. So send us an Instagram message or reach out to us on YouTube and leave us a comment of something that you want to learn about. He also mentions offering clarity calls through his website, baluchcapital.com. So you're going to want to do that. And if you would like to book a call with me as well, you can do that with a link in the show notes. So without any further ado, let's get started with today's awesome episode with Dr. Amir Baluch. Dr. Amir Baluch, welcome to the Physicians and Properties Podcast. I'm so excited that you're here tonight. Thank you for joining us from Dallas, Texas. How are things going?
Doing good out here, just burn the midnight oil, another podcast, right?
Awesome. Well, thanks for doing that. I'm glad you're here. Thanks for staying up in order to do the podcast. Really appreciate it. And I'm really excited to have you on. As I mentioned before, Dr. Landon Frost, who's a friend of mine, he had the pleasure of interviewing you recently and he highly recommended. So he reached out to me on Monday and I was like, this is perfect. I'm talking to him in 2 days. So really excited for the podcast. Yeah.
Pretty cool.
Awesome. Well, hey, do you mind telling folks a little bit about yourself?
Yeah, so I live in Dallas, Texas. I'm a semi-retired anesthesiologist and real estate developer here. My brother and I together, as well as we do a lot of wealth strategy and tax strategy for people, not just on the real estate side. We also do consulting for private equity and private credit, but it didn't always start out that way. So, as it usually goes, there's always something that has to spark that interest to get moving.
Yeah, absolutely. Amir, as an anesthesiologist, where'd you go to school? Kind of what was your motivation to get into medicine?
Well, I actually wanted to be a dentist or orthodontist because my teeth were so crooked. And I had such a great experience with my orthodontist and 3 years of braces, my teeth became straight. So I was like, I want to do this the rest of my life. But day one of college, I said, hey, I'm going to be pre-dental. And they said, yeah, we don't have pre-dental, but we do have pre-med. I'm like, okay, I guess I'll be a doctor. So that's how that went. Although I was thinking about that anyway. My dad was internal medicine doctor, so I was going to do something like that. And then, it didn't start off the same for everybody. So when I applied to medical school, I actually got a fat rejection letter. That was around the year 2000, right as I was graduating from college. So I had to reapply. And in the meantime, I started my first business and lost my life savings there. And so that was kind of frustrating. I tried to do some real estate, no credit, no money. That didn't go very far. And so then I moved back in with my parents in Midland, Texas. And a couple months later, my dad actually went bankrupt, and he was, internal medicine, making actually really good money. 7 figures back in the 90s is a lot of money. But, not a lot of planning or financial education. There weren't podcasts like this that could educate people. There were no masterminds, right? So moved to a 1-bedroom apartment, $250 a month. And as I was staring at the ceiling fan, I was like, you know what? Let me make sure this doesn't happen again. What do I need to read? What do I need to do? I was getting audiobooks back then, cassette tapes, whatever I could do, CDs, spent a lot of time at Barnes and Nobles. People weren't buying books on Amazon, so that's kind of when I started getting in. I listened to Tony Robbins, Brian Tracy, old school people. And then, but eventually I did get into medical school. Obviously, I did anesthesia in Miami, and then moved to Dallas, which I knew I was going to come back to Dallas anyway. Moved my family here. And in the meantime, was working on real estate deals even through medical school and residency. So, like in medical school, I was a LP on a multifamily deal. And we did a short sale flip when I was in residency. And so now that I'm in Dallas, I actually have some credit and some money. It's time to get going. So
awesome. Well, that's a cool backstory. Thank you so much for that. A couple things I noticed, you did go through some pretty significant struggles. Rejected from med school, starting your first business that went bankrupt, your family situation. I think it's important to talk about those struggles and the failures, because I'm sure that's really impacted your future and how you've invested and so forth. What are some things that you learned during that time, or maybe what are some things carried over from that time now as you've become really successful in real estate and business?
Those first two, when I was even trying to do real estate on my own, I tried to start my first business on my own. And that rejection letter from med school, I really didn't have any real guides. So, for example, when I didn't do that hot on the MCAT, but the second time around, I was studying with people that were super gunners, top of their class, and they really showed me the way, how to actually, set up a study plan and things like that, and how to bump up my resume a little bit and get some interviews. So, it's just who you going to hang around that could mentor you. And on the business side, I knew nobody. I just heard some radio ad, hey, put in this amount, get a license to do electronic payments from home. This back in, the year 2000. I didn't know any better. I reached out to Amazon and said, hey, you could collect checks online. I could do your credit card processing. I had no idea that they would say no to me. I was like, this sounds like a great idea. Let me just go talk to some heavy hitters. I had no perspective, no mentors. So eventually when I did get some mentors, the first big one being a private REIT in San Antonio that now has done a few $1 billion in AUM. I learned from those guys multifamily in 2005. And then I had another mentor in Dallas that showed me how to put together short sale flips and buy properties with no money. And we actually did it. I didn't make a killing, but I made 17 grand, which buys a lot of drinks at the bar when you're in residency. So I had to learn. So I continued with that mentorship. And so in 2011, so now I'm back in Dallas. In 2011, I joined brokerage, Keller Williams, got my real estate license, then started on my own with a supervisor broker kind of walking me through that. So that's why our brokerage was successful. I had a mentor there. And then before I got into investing correctly, just thinking about what happened to my family, I was thinking, who lives their whole life just dealing with investments? So I was looking up, trying to find ways to work with like an investment bank. So they said, Amir, you got to get your securities license. So I got a Series 22 and a 63 and joined those guys, and we did almost $1 billion worth of commercial real estate, hard money loans, and fix and flip projects and some private equity. So that was almost like another residency, about 5 years working there remotely, of course, because I'm in the OR during the day. But that really helped me a lot. And I think those are some key things right there, is not trying to do it by yourself. Just find somebody that's already been there. Who are the people that already have the goals that you're trying to achieve, and then work with them.
Yeah, absolutely. Two themes I noticed from your story there. One, you took action. Like you started that first business, you reached out to Amazon, you weren't afraid to reach out to Jeff and say, hey, I have the solution for you. And that in itself, is hugely important. I tell folks all the time, you just have to be willing to take action, and that action can be imperfect. It can look like Amazon's turned it down your idea, but you took action and you kept going. The second thing, as you mentioned, you found mentors in the space, right? You found folks who were doing what you were doing, who showed you it was possible, and you were able to partner with them and work with them in order to grow. The other amazing thing is you did all this as an anesthesiologist. It wasn't like you were, just that was your full-time job, was working in the brokerage or getting your Series 23. Like you were also working as an anesthesiologist. So how did you balance, getting your Series 22, and 63, and being a broker dealer and being an anesthesiologist? What did that look like? What did that transition kind of from medicine to more entrepreneurship and real estate? What did that look like for you?
Well, the real estate license wasn't that difficult. There's some, just like, when you're saying for the MCAT, you look at the old exams and that's kind of what you're going to get on the real exam. That part was easy, but learning the business, doing 6 months with Keller Williams really helped. And then I would just do co-listings. So I would just like in the marketplace now, a lot of people coach EP and partner up. I was doing co-listings with people and co-brokering until I got the hang of it. And then on to get the securities license, that actually was not fun. That was pretty difficult. I barely passed one of those. I think it was the 22. I barely passed that thing. But you just got to set aside the time and make a plan. And, if anybody wants to learn about efficiencies, I have so many efficiencies tools and just planning and maxing out your time, not allowing Parkinson's law to, make you think a 1 hour task should take all day if you have all day. So if you really just sit down and make a plan, you could get it done. And when people underestimate what they can do in a year, but they overestimate what they could do, or they underestimate what they can do in 2 years, but they overestimate what they can do in a year. So if you just kind of make a plan and have a timeline, for me, it was about half a decade to get all my learning done. You could accomplish a lot.
Yeah. And the time goes by fast, and you can, you're so surprised by what can happen. I look back at this last year, just for me and our businesses, and it's been unbelievable. And it's just so cool to see what can be done in a year of consistent effort and just really putting one step in front of the other and continuing to climb the mountain as you get closer and closer to the summit, and I'm trying to do a good job as I'm doing that. I've taken some time to look around and enjoy the climb as well, which is really cool. How did your businesses and your real estate, how did that give you the flexibility to practice anesthesiology how you wanted to?
Well, it did take a long time. So, I noticed at first I was focused just on increasing my net worth. I'm like, let me just make a bunch of money, and then my money will make a bunch of money for me, which is cool. That's definitely one way to do it. But having businesses or having equity in the businesses that cash flows really got me going faster. And then focusing more on cash flow versus equity multiples helped as well. Although you got to look at all that stuff. But at the end of the day, you kind of need that monthly income if you want to pull back a day or two a week and go part-time. So that was really the trick, is to focus more on cash flowing items versus large equity multiples. So like we had some private equity funds too, which are doing well, but these exits don't happen for sometimes 7 or 10 years. That's not going to help me pull back from anesthesia or anything. So I think focusing on cash flow is definitely important. Definitely some of the basic living below your means, finding out what you actually need versus what you want. So those simple things can really compound over time.
Yeah, absolutely. Amir, let's, if you don't mind and you're willing, take a step back and kind of look at overall, what does your portfolio or what do your businesses look like now? And then I want to hit on some of the key things that you've done as you've been growing your businesses. And of course, I know that you've also wrote a book as well. So I want to make sure we hit on that too.
So some key things that were part of the business growth, you're saying?
Yeah, business growth, real estate growth. What are some tips or tricks or some strategies that you have for physicians who are getting started or maybe who are looking to take that next step in their financial journey?
So a couple of things, I'm thinking if I went back, what if I wanted to go faster or more strategic? I think one is you have to have a big picture of what the heck is going on. Like you might talk to somebody in the doctor's lounge and they're like, oh, I'm doing this. I'm doing a laundromat. Then your whole focus the next couple months, like, man, how do I get a laundromat, right? I think people need to step back and look at all the asset classes and for me, I break it down into three things. Nobody broke this down for me. I had to kind of figure this out a little bit on my own. But in the world of alternative investments, so you have traditional and you have alternatives. I'm just going to explain this because I think if I don't do it, I don't know where this is on the internet.
Sounds
you have like
good.
Traditional, which is, ﷺ 40 bonds, all that stuff, maybe some insurance products. Then alternatives, which is pretty much the world we're living in, this podcast about alternatives, right? In the world of alternatives, you break it down into real estate, private equity, and private credit. And then in real estate, you could break it down to multifamily, assisted living, whatever you want. There are a bunch of different categories. And you have single family, you have build to rent, which is what I focus on. And then in private equity, it just means private businesses, which could be a lot of things, a lot of different ways to look at it. I break it down to venture capital, which is idea stage, growth equity, which is, now you're going series A through Z, and then leverage buyouts, which is like take a seasoned private practice, for example, and buy out a bunch of doctors and put it together and then sell it to somebody else down the road. That's private equity. And then private credit is basically debt. If you want to be a hard money lender, you want to get into syndication, but do first position debt or something. So, and that's also the oldest form of investing too. So now you have the layout. Where do you want to be? Let's say, we're focused on real estate on this podcast. So you want to do real estate, let's say it's assisted living, multifamily, or build to rent. Now break it down even more. Do you want to be an operator and be active, or do you want to be passive and just be the best passive investor ever, right? Maybe that's a good thing for a lot of people. And then if you want to get in where you want to get in, you could do acquisitions, you could do brokering, you could do management, you could be on the syndication side, you could be on the disposition side, you could do tenant rep, put people into retail spots. And then see what vibes with your personality. And I don't know if you heard the term ˝Ikigai˝ before. Have you heard of that?
Yeah,
so
I have.
You have to find something that makes money, that you like doing, that you're good at, and you feel that people need it. So you have that purpose. And in all this world that we just kind of described, where do you feel like this is going to be the fit where you can excel and have a good time doing it? Because if you're going to be doing this for a while, you kind of need to make sure this is the right fit, and you've kind of looked at the landscape. So that's, you were asking me tip number one. I would do that and see where I wanted to go. Because there's a lot of places to go. And I think, I'm headed more toward private equity and business acquisitions these days. It's probably 50-50 with real estate, but I didn't know that because I didn't even understand private equity at all back in the day. And then the second thing is getting a mentor. I mean, that's the fast track. I mean, why are you trying to blaze your own trail with somebody who already did it and they already know where the pitfalls are and the landmines? So just get somebody else to show you where the landmines are so you don't get set back by half a decade or something like that, right? And then now I'm going to speak to the operators. If people out there that are running it, and I'm not sure how many people listening want to be passive or versus operators, but you have to have some type of a system to run a business. I use a system called Entrepreneur Operating System, where we have 10-year goals, and we go 5-year, 1 year, quarterly, weekly, and even daily. And I have a business coach every day for 30 minutes, daily accountability. What are your top 3 things to move the needle? Are you sure those top 3 things? Boom, boom, boom. And that just compounds. Imagine every day, like tomorrow at 6 a.m., she's going to ask me, Amir, did you do your reach out? Did you get your email ready for Friday? The answer is no. I'm going to do that after this podcast, actually. I got to talk to her at 6 a.m., right? So you get this accountability. Now that you know what you want to do, you've seen the landscape, you know what you want to do, you have the mentorship. Now you need an execution system, and you need accountability. As doctors, we're pretty smart, plus or minus. We at least are pretty ambitious and can read books and take tests. So now we need somebody to push us and make sure that what we promised ourselves we're going to do, we're actually going to do it. It's not that we don't have the ability to do it, but all these things kind of have to come together if you want to shave off a decade or two before getting to semi-retirement.
Yeah. Wow. There's a lot we could unpack there. And I love that. I think really cool to hear the kind of broad overview of alternative assets, the real estate, the private lending, the private debt, and narrowing that down to active or passive. And we've all heard of shiny object syndrome. We've talked about that on the podcast extensively. And, I like to use the analogy of you're going to a buffet and you see all the different types of food that are available. Maybe you sample a little of this, you sample a little of that. That's trying out the different asset classes to figure out, hey, what's the main course? What's the main meal that I want to? And sometimes it can take some time to do that. And that can be helpful, to figure out, hey, what is something that I'm passionate about? How can I go from passive income to passionate income, which is a phrase that my buddy Brian Lubin likes to say a lot. And that passionate income is where you could really put your focus in and where you can really excel and exceed going forward. And so it's really important to think about that as you're going through your journey for the folks that are listening. You mentioned, Amir, the mentorship and the accountability piece, which I think is huge. And I want to riff on that a little bit, because I think sometimes as physicians, we are smart, we are driven, and we think we can do it all by ourselves. What are some ways that mentorship or the coaching has expedited your journey? And maybe if you're willing to share, like what would you tell folks who say, hey, I don't want to pay for the cost of a mastermind or a mentorship? What are some ways that you kind of think through that in terms of how that's also going to lead to you ultimately making way more money in the future quicker?
Well, you're going to pay one way or another. You're going to either pay with time or you're going to pay for somebody else's time to package it for you. I mean, there's no two ways around it. So, I mean, maybe somebody will give some free tips here or there, but, sometimes free advice is the most expensive, like they're just kind of telling you whatever just to give you an answer. But if you're actually paying into a mastermind and giving them those financial resources to make it really quality for you, I mean, you're basically just saving time. And I think as physicians, if we look at what our hourly rate is, we can save a couple hours here or there. It makes a lot of sense for us to do anything to buy our time back, right? It just makes a lot of sense. Now, so that was on the mastermind. What was the other question?
The other question was kind of what are your thoughts? And when folks come to you and they're like, hey, I don't want to spend the money for a mastermind or for a coach, what are some examples or what are some things that you tell them about how that investment now is going to pay off tenfold, 20-fold down the road for them?
Oh, yeah, that's pretty easy. I mean, if you think about, everybody knows about compound interest, right? What if let's say you're getting 10% return a year. After a couple decades, 1 decade, 2 decades, or a couple of years, you're at a certain number. But what if a mastermind even makes you 5% better or 10% better, 50% better? Or some masterminds might tell you, hey, you're going the wrong direction. You got to jump out and do this. Like, hey, you just saved yourself maybe 10 years going the wrong direction, right? So I think, getting those little bits of information that are not really publicly known or maybe not packaged correctly so you could take that information, that's going to, compound your ability to get to where you are. That's really why it makes sense. And then by the way, I'm a mastermind junkie. I've joined so many masterminds. I probably spent at least $300,000 on masterminds, at least. But one mastermind, I put my brother through it. It's called the Real Alliance in Dallas. Doesn't exist anymore. It was a coaching class in person for people that want to get into residential fix and flips, remodeling, things like that. And I put my brother through there because I don't have time to coach him. So it was like $17,000 or $20,000. And not only did that saved me some time, he learned better than me teaching him. And then he became a coach, which then got us a bunch of deal flow in Dallas. And we're connected to a few thousand people in Dallas now because of that mastermind. And they're still giving us deals, off-market deals, which I've never bought a on-market deal. All of my deals are off-market. So, I mean, if it wasn't for that one mastermind back in 2012, I mean, our whole network would have taken us, so many years, to make that happen. And then other masterminds we found, our business partners. So one person who built the Omni, actually, if this camera didn't have this fading thing, you'd probably be able to see the Omni in the background, but he built that. He's on our development team, the top seller for DR Horton. He's done over 22 billion in transactions. He's part of Baluch Brothers development now. I was able to connect through another mastermind to senior investment analyst at BlackRock. He's my underwriter now when we do our real estate deals. So this networking, you never know what's going to happen. And some people, you can partner up and do deals together, or some people can give you deals. So it just kind of makes sense to get into a group of people that kind of have similar goals in a similar asset class.
If that wasn't a good enough answer for folks who are on the fence about joining a mastermind and investing in themselves, I don't know what we can do for them. Yeah, because it's awesome to see, not only the financial reward that can happen or the financial benefit of joining a mastermind or a community, but also those partnerships and the deal flow, all these other things. And relationships are the key to the game when it comes to real estate investing, entrepreneurship. It's just so important. I want to pivot a little bit, if you don't mind. You mentioned you're investing about 50% in real estate right now and 50% in small business acquisitions. Small businesses are not something we've talked about too much on the podcast. What do you like about small businesses, and where do you see the future of small business acquisitions going?
Well, I think that's going to be the future of getting high yields. So usually where do you get high yields? It's going to be in inefficient spaces. So it used to be that real estate was very inefficient, but now actually a lot of people have gotten into it. And what's the most efficient system? Let's use that as a metric. Public stock market, right? Which right now has a price to earnings ratio of 40, which is like 2 standard deviations above the average, which is around 20, which, by the way, for people listening, that just means for every dollar of net income, you're paying $20 per share. Or like if you guys have any experience with commercial real estate, if you understand cap rate, PE ratio is the inverse of cap rate. So cap rate of 5 means if you buy something all cash, you get 5%. The inverse of that is 20. The inverse of 5% is 20x. You're basically paying $20 for every $1 of net income, right? Now, if you can pay $20, people like to pay $20 for $1 of income. Well, in these small businesses, I'm buying it for like 4. So imagine if I'm buying something at 4 times multiple, the inverse of 4, the inverse of 1/4 is 25%. Well, my return on day one without leverage is 25% cash on cash. Buying, if you could get it at 4x, right? Not all businesses trade at that. Some are 7, some are 12. It depends on the size and everything. So like, for example, I buy out e-commerce businesses at sometimes even 2 or 3x. So it's like, 33 to 50% cash on cash for small ones, like bought a $40 million, not a $40,000 business, not a $40 million business.
I would say that's small.
Yeah. The bigger it gets, usually they're more stabilized and the multiple goes up and your cash on cash return comes down, but you can decide where you want to be in that whole spectrum. So that's what I like about private equity. And if I ask somebody right now, okay, give me the best operator for laundromats, give me the best operator for donut shops or funeral homes. I mean, how many businesses are there? It's probably like, we could probably sit here and go back and forth and name 1,000. Who's the top operator in those spaces? You don't even need to be the top. There's not so much big conglomerates, and you're buying from mom and pops, and the multiples are low. So I think it's really some crazy cash flow. And, real estate too, some people even consider real estate a branch off of private equity because it is a business, right? Those same metrics we talk about, you could apply it to real estate. Just real estate likes to use the word cap rate instead of equity multiple, but it's just the inverse. So real estate's a business too, just it's easier to understand. You have a box. Where's the income come in? Okay, you rent. Your expenses is mainly management and turnover. Okay, you're done. You don't have to. Now let's go explain. We go over like an e-commerce store with supply chain and stuff like that and factoring and all this stuff's like, it gets a little bit more complex. But if you understand that complexity like a niche, like for example, some doctors really know surgery centers, or they really know ketamine clinics, or they just know something, this little healthcare niche. It's a business. Somebody from the outside will never get it the way a doctor gets it. And you could really kill it in something like that too. So even just thinking of in our own world in healthcare, what if you wanted to buy out a medical spa or something like that? At least you know something, medical. And you could buy these med spas, by the way, at around 4 to 6x right now is reasonable price. So just some examples.
Yeah, that's great. Amir, for folks who don't really understand the valuation or what to pay or the equity multiples, what are some kind of basic terms for small business acquisition that are helpful for folks as they're trying to figure out how to value a property or what a property may be worth?
Got it. So I like to stick with the multiples thing. So let's look at it as a business. In the back of our mind, we know that when we do commercial real estate, we inverse it and call it cap rate. So let's say if you have a really high risk business, what's the highest risk business? I'll ask you, Alex, just name any high risk business you would never want to get into as an example, and I'll go through the numbers.
Yeah, let's not do a high risk business. Let's do one that I'm more familiar with. So let's do residential assisted living for folks.
Okay. So residential assisted living, I would say, if it's a tertiary market, low growth, maybe less potential, you're going to pay less for the cash flow, right? We're talking about buying existing ones.
Right.
So the more that it seems like there's less that there's more risk and less growth potential, the cheaper you're going to get it. Versus, let's say, a stabilized Class A multifamily made out of marble. It's the Ritz-Carlton, people are going to be paying a 3 cap for that, right? It doesn't even matter the interest rate. Somebody will buy it all cash to get 3% return a year. That's what they do. And the other extreme, let's say if you try to buy a restaurant or something like that, a lot of banks don't even lend on that. And if they did, you're going to buy that restaurant at probably a 1x. So if the restaurant made $1 million, you're going to buy it for $1 million. Versus a multifamily making $1 million, you're probably going to buy it for 20 million, plus or minus 15 or 20 million. So it's all about the spectrum of risk. And does the risk mean, management risk, industry risk, the risk of failure? And then it goes up as it's more stabilized, and it goes up as the growth curve or the potential growth curve is seen as going astronomically up. Like, for example, all the tech companies right now are trading at ridiculously high multiples. I think like NVIDIA and Tesla, they trade like 70, 80x sometimes. So don't quote me on those numbers, by the way, a stock market guy, but I think it's somewhere up there.
Yeah, absolutely. Yeah. No, well, that's fantastic. And, of course, as more and more businesses, say you own a laundromat, for example, as we were mentioning earlier, if that laundromat is at a 3x multiple, but maybe you then own 5 laundromats and you can package them together and sell them off together, then you can oftentimes get an even higher multiple. So that's another beautiful way for small business acquisitions where you can pull different levers, make more money. And of course, as you mentioned before, with the commercial real estate perspective, like, hey, if we're increasing income, we're adding a ton of value to that business, whether that's through equity multiple of, hey, I'm paying, 5x on that money, or whether you're looking at commercial real estate from a NOI and cap rate perspective. So it's really cool. Small business acquisitions, I think, we talk a lot about the silver tsunami in residential assisted living as we have these baby boomers that are aging residential assisted living homes now in the future. But the silver tsunami also exists for mom and pop operators or mom and pop businesses who are getting ready to retire. And that is a fantastic opportunity for folks who are thinking, hey, I want to buy a business. You're solving someone's problem. They want to retire, and you're able to continue their legacy and continue that business going forward. Is that you guys are finding often, or something that you're looking for as you're acquiring more small businesses, Amir?
That's definitely a trend, and we have seen that happen. But most of our acquisitions is just the business owner wants to get out. That's just, we know that trend is coming, but that's not a majority of our acquisitions right now. But one thing that's similar is when these business owners want to sell, the smaller businesses / mom and pop, they definitely want to pass it on to somebody that's really understands the business is gonna carry it on. Even right now, I'm helping broker a med spa. I'm not even making anything on it. He doesn't even want to make anything on it. He just wants to know that it's going to be in the hands of somebody that's going to, keep continuing to grow what he spent years building, right? So it's almost like a legacy transfer for these people, not as much as, a cash out or anything like that. So they're usually not as concerned about the money as you think. It's more about who's the person they're going to hand it off to, which is good for, people like us that are learning how to be really good at dealing with these assets.
Yeah, and it all comes back to relationships. As we've mentioned a couple of times now, just the importance of relationships, whether that's buying a small business or whether that's investing in real estate or building relationships with brokers. I mean, it's super important. And you're solving someone's problem, you're solving the problem of retirement for some of these, mom and pop operators. So it's really important to figure out, hey, what's the pain point that seller has, and figure out how you can help them with that going forward. What are some projects that you guys are working on right now?
On the real estate side? We'll talk about some real estate stuff. We doubled down on build to rent communities. Basically, we're building subdivisions of single family homes or townhomes, but building it with the idea that we're going to rent the whole thing or sell it to one big investor that will rent it all out. It's almost like multifamily 2.0 with less turnover and less of a ceiling on rent, since you're going to have a backyard and sometimes 3 stories with a rooftop deck, like one of our deals right now. So we like that a lot because less than 5% of rental units are these single family things, and the demand, you probably already know, we're not even going to meet the demand or come close to meeting the demand of single family for probably 15, 20 years. So we're so far behind. And there's so many restrictions for, limitations to building so fast. So this is like a good place for me to be for the next 10, 15 years. And it's also just kind of fun to build. So I think, I remember I used to build Legos back in the day. I used to build forts out of my pillows. So this is just kind of cool. It's the evolution of that, basically. That's how I think of it, and how to make money too.
That's
so
awesome.
those are some projects that I like. And on the non-business one, all this is a business one. Eventually, what I want to do with a huge chunk of my money is grow schools and help other communities learn, because education is really the key for everything. So just actually a couple of weeks ago, we bought a 3,000 student college. This is in Pakistan. It's kind of like a technical institute, and we're training them on AI, machine learning, software development, graphic design, things like that, digital marketing, ways where they can make money in US dollars. And actually, because the economy in Pakistan isn't that great. I think inflation is like 30%. Don't quote me on these numbers, by the way. I just know it's way higher than ours. But, something like that can stabilize that area. And, we're helping out probably 3,000 families, and we get them, some good paying jobs in a currency that's not as affected by inflation as other currencies. So those are probably the two things that I'm focusing on right now.
That's really cool. And what an awesome way to give back, change communities, in the States, but also internationally there with the school in Pakistan. That is awesome. I love hearing that. Well, I want to be respectful of your time. I know you have some things to catch up on before you talk with your business coach tomorrow. Right. So I don't want to keep you up too, but I do want to make sure we hit on the book that you wrote and the book that is coming out soon. So do you want to plug the books? And then if folks want to reach out to you to buy the books more or invest with you, how can they do that?
Got it. So the first book was called Make It, Keep It, A New Age Wealth Strategies for Physicians. That one's on Amazon somewhere. And the new book is called Prosperity Prescription. It's a little bit more interactive. You have to scan QR codes and watch videos and download worksheets before you go to the next session. Although you can cheat and not do that and go to the end, but you're supposed to do it in progression, right? So those two things, you guys want to check them out. And there's probably is a link somewhere if you go to 𝐓𝐢𝐦𝐞𝐬𝐭𝐚𝐦𝐩𝐬, or you could message me off that website. We do have a 12-week accelerator for people that just want to learn some basic finances, and it's really just about building a foundation. Just make sure your foundation is strong. We don't even really talk that much about real estate, just very strong financial literacy. 12 weeks, 1 week at a time is super easy, but at least you're not going to miss some foundations. And then, somebody wants to book like a clarity call, I like to call it, with me. If they're like, hey, what do I need to do? I read this, I did that. What's the next step? I don't have a mastermind or anything like that, but I could point people in a certain direction, or maybe point people away from where they were going, depending on how the conversation goes. So that's pretty much it. But pretty easy to find online on our website, 𝐓𝐢𝐦𝐞𝐬𝐭𝐚𝐦𝐩𝐬.
That's awesome. We'll be sure to include those links in the show notes. And, hitting that clarity piece real quick, that clarity piece is so important, and maybe it is turning you around and doing a U-turn and going another direction, but that may save you a lot of time, money, and frustration going forward. So really important to reach out to folks with experience. This has been awesome. Is there anything that we haven't hit on before we wrap things up?
I think that's pretty good. There's some stuff to digest on there for a little bit. And, based on the feedback, if you want to jump on a second one, if people want to dive into something else, we just hop on another call.
Absolutely. I'd love that. If folks are listening to, go ahead and send me a message on Instagram, Physicians and Properties, or reach out on YouTube and leave us a comment on what you want to dive deep on, and we'll bring Amir back and we'll get him back on the podcast, and we'll dive a little bit deeper into small business acquisitions or specific real estate deals or whatever you folks want to talk on. This podcast is for you. And Amir, thank you so much for your time. I really appreciate it. Thanks for staying up late, burning the midnight oil to be on the podcast.
Yeah, no problem. Happy to be here. It was good talking to you.
Thank you. Thank you. Well, with that, it's been Dr. Amir Baluch and Dr. Alex 𝐻𝐻𝐻 with another episode of the Physicians and Properties Podcast, signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial, medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.